This is the Kindle Report for Thursday, March 19th. Hey everyone, welcome to the Kindle Report. Don't forget to subscribe, click the bell, and share these videos. Well, there's a ton to talk about again today. I don't know about you folks, but all the days are starting to blend together. Somehow it's already Thursday, and we've had so much volatility. It's even hard to put together what's happened over the last 3 weeks, to say the least. But the hysteria just continues. You see the administration talking about $1.2 trillion stimulus bills, sending $1,000 to everybody. I don't know what that's supposed to do. I guess it's to show everyone that the government cares about us, right? It's not material. It's not going to change anybody's life. Maybe there's a few people that could really use $1,000, but for the most of us, it doesn't mean anything, and it's a joke. They could not send me mine, let's say. Bottom line is, the next bullet point is government support doesn't work. And I talked about this last night. The next tag after this, ECB joins in. I'll unpack this, but the TARP bill back in 2008, it was the midpoint of the decline. All it did was tell everybody how screwed up everything was. And that's exactly where we are again. And in fact, we don't even know how screwed up we are. Not that they did in 2008. You know, when you look at things, there's no way to measure this thing. How long are they going to continue to keep the economies of the world shut down? Because guess who's actually coming back and starting to function pretty good? China. These are the guys that sent this shit out to us. And now the rest of the Western world is collapsing. And China took a hit, but they're going back to work. They've been trying to figure out how to get self-sufficient for the last about 10, 15 years. They've been working on this project, and they probably have got it figured out. So the bottom line is, the government programs they're putting on right now may have an effect longer term, but for today, it's just making market sentiment worse. And I have said this several times over the last couple of weeks, is that anything they do, anything they say causes more anxiety. We're on the edge of potentially a major panic where it goes beyond toilet paper. And that's a scary place to be. Now that they've created this hysteria and the numbers still don't match, and they're talking about we're looking more and more like Italy. No, we're not. I think it's crazy to drive this narrative, but all of the news agencies, everywhere you go, they're playing this up. And it's just making things worse. They're talking about social distancing until we get a cure or some kind of vaccine. That could be a year from now. What does the world look like if you have to shut down the economy? No restaurants, no sporting events. Think about America and Europe even. No soccer, no nothing. Because you can't get that many people together yelling and screaming and spitting on each other. So the bottom line is, this is really crazy. I don't know how long and how far they will take it, but these stimulus programs are worthless. So the ECB came out and announced a Fed-like stimulus, and the Dow Jones, this was tonight in the futures, bumped up 400 points. Last I looked, they were down 300 now. Everybody knows this stuff doesn't work. Dow surged to all-time new highs. I've been talking about the Dow surge for a while. Didn't think it would happen here. Treasuries collapsed today. We up to 1.26 or 27. We'll look at them in detail here in a minute. But the bottom line is, the bond vigilantes are out in force right now. And they're just selling. They're selling everything. It doesn't matter what it is. The only thing that seems to have stabilized pretty well is Bitcoin. Everything else that is an asset, gold, Doesn't matter. If you can raise money, they're still selling. So the bottom line is the programs aren't going to save anything. They're not going to change anything. And even though we bounced off of the lows today where we closed down, I think 5.8 on the S&P. We were down 10% at one stage. It hit the circuit breakers. And I keep talking to you folks about this over the last several days, that these waves of selling keep coming. And we're trading crazy number of shares, somewhere over 7.5 to 8.5 billion shares every day. So the amount of turnover is just insanity. And I can't imagine that this is working out well. Being an ex-floor trader and being around some crazy days, I never walked out of there that many folks on a crazy day walked out of there making a bunch of money. Most everybody lost their asses those days. And it's volatility just can't, it's got to be chewing up capital everywhere you look, even for the traders. I'm not sure the algorithms, anybody's making any money. Maybe they are. I'm not behind the scenes. Somebody is for sure, but more money is getting just vaporized every day we go through this stuff. I'm going to do a separate video. I'm going to mention it right now. I'm going to do a separate video on the mutual fund companies and the custodians and some of the banks, because that is where the risk is really starting to show up. And I'll go through that on a separate video. I'll try to keep it as brief as I can. And I'm trying to keep these nightly videos to about 15 minutes, maybe 17. I'm just doing my best to keep them short and brief and to the point. Let's dig into the technicals. So in tonight's video, I'm not going to be breaking down all the details of the pattern that's unfolding. But one thing that did change, and I'll update this after we see another day of trading, is I talked about the ratios that suggested where the prices could go on the downside. And the downside with a 1.618 ratio was 2260. We actually hit 2280. We rallied 118 points off the lows. These are S&P points. We're not talking Dow Jones. This was a pretty impressive rally off the lows, but we've seen this before. We're down another 3.5%. So the whole bounce, it's not all the way back yet, but we're down 81 handles right now in the S&P. So if you want to see the details of this pattern, watch last night's video. Around 6 minutes is where I unpack that. This market just can't get on its own way. So we're back down 3% overnight. No sign that we're at a bottom. Now the numbers match. Maybe we'll print a lower low tomorrow and we'll go down below the 2260 or test that number. But if these numbers don't hold, I will update the numbers. There's other ratios that could come into play here, but they get seriously ugly. And as I've said, all of the folks that are hanging around VPN Partners, our portfolio expert platform, you folks should be out. If you're not out, shame on you. This pattern just keeps expanding itself. And there's something else happening, and I just want to mention while we're looking at the S&P chart, is that if you did 60-40 strategy, you're getting killed because the bond market went straight down and the stock market, they both went down. It's just getting ugly. It's not protecting anything. It's not supposed to work that way, right? Supposed to put 40% into this asset that's supposed to be offsetting when the market's going down. Not happening, and there's something going on in the treasury market that is bigger than big. And I've talked about this for many years, but now we're seeing the bubble bursting. You look at the weekly chart, and it's hard to believe that 5 weeks ago we printed an all-time new high. And one of the things I wanted to point out, the models right here, we got a sell short at 33.73 on this. On February 20th, there was a sell signal. It rolled over. I've talked about this on our database, started selling literally on 121. It's been a net seller every week from January 20th on. Just kept selling. And of course, when we gapped down, we got more selling. And for the most part, we moved to, I think, 20% of the database is long right now. So we're just out. Say it again while I'm rambling on about this stuff, is it's okay to be in cash. There is no opportunity right now. It doesn't matter if something prints a low and rallies off the low. It's not going to be trending up. You need to understand that fact. The fact that it printed a low, one of my favorite cliches over the last, I don't know, probably 30 years is cheap doesn't make it good. The fact that stocks are cheap doesn't make it good. Anybody that talks to you about long-term holdings and all that shit, hang the phone up, get away from them, okay? There's no long-term opportunities here because we don't know what we're dealing with here. We could be dealing with the next depression. This whole thing could implode. I'm not saying it will, but right now there is no bottom and there's no reason to be participating on equities right now. I said this a couple times. There is nowhere to hide. They're taking gold down. They're taking every asset is being liquidated. So there's nowhere to be hide. There's only one place to hide right now, and that's cash. And when I do the video on the banks and the custodians, I'm not even sure that's going to be safe the way things are looking right now. So hopefully we'll get some stability. Let's go on and let's take a look at the treasuries. I discussed last night that I thought the treasuries could go back to 1.34. We finished today at 1.26. These things exploded today. Yields were up about 26, 28% today. Talking about we're going to zero, that doesn't look like a chart that's going to zero. In fact, it looks like the opposite. It looks like a chart that's going to now potentially to 170, maybe 2% on the 10-year, and that's not good, folks. I've talked about this for years, that the bond vigilantes would show up, and there is a massive liquidation going on in the treasuries. Not sure where it'll hit. 1.34 is going to be a trigger point. If it gets above that, then it's all the way to 1.73, 1.75 area. Look at the intermediate and you'll see how dramatic this is. This low that we printed at 0.39, that is the low. And this reversal tells us that it's very possible we're going to get back easily to that 1.6 to 1.75. What's likely to happen here, hit some resistance and then it's going to consolidate, but you're going to stay above 1% now. We get back under 1, you could go to 0.85. A quick glance at the monthly chart, you'll see this big spike. We are right now still the better part of 2 weeks away from the end of the month. If treasuries finish above 1.12, it's going to be a major signal, and we'll head toward the numbers between 1.6 and 1.75 to start with. Ultimately, we could be back in 2 percentile range. I know that sounds crazy, but there's something else going on. The trend in the dollar started last week, actually, in the big outside reversal bar, and now we're just followed through. It's an explosion today on the upside. The patterns that are unfolding here, PPMs are just kicking in. We got a plus 0.56, 0.26, and PPM 3 at 0.16. We are in big time trend mode. This thing's not going to go away. We're probably going to stay above the 97 level. I have some long-term objectives that suggest we could go to 108 to 112. The U.S. is still the only beacon on the planet. It's the only light spot. Europe is becoming very dark and people are buying U.S. dollars. This still is the safe haven. The U.S. seems to be the place that people want to hoard dollars. That's what's happening. As always, I really appreciate you watching these videos. Make sure you like, share, and subscribe. Have a great day. We'll talk to you tomorrow.